Avoiding common errors surrounding required minimum distributions. Common error. I took a required minimum distribution for my 401k. This will satisfy both the RMD for both that account and the one I have to take for my IRA, or any other account for that matter. What the rule says. RMDs, or required minimum distributions, can be aggregated for certain accounts. For instance, if you have multiple traditional IRAs, you can take an RMD from one account that equals the total amount of RMDs you would have to take from all accounts. So if you have two traditional IRAs and each has an RMD of $1,000, you can withdraw $2,000 from one account to satisfy both RMDs. RMDs for SEP, simple, and rollover IRAs can be aggregated with traditional IRAs as well. This same RMD aggregation rule can be applied to multiple 403B plans too. You cannot, however, take an RMD from a 403B plan to satisfy an RMD from an IRA. And when it comes to 401k plans and other non-IRA accounts, such as profit sharing plans, you must take a separate RMD from each plan. Common error. My mother passed away and left me her IRA. She hasn't yet taken an RMD for the year. I don't need to take one either. What the rules say. When you inherit a traditional IRA from which the decedent was taking RMDs, it is up to you as the beneficiary to satisfy any missed distribution and to pay the taxes on that distribution at your marginal tax rate. If there are multiple beneficiaries, the RMD amount is typically divided among the group, and each person is responsible for paying taxes on their portion from their own IRA beneficiary distribution account. Common error. I just retired and have a substantial RMD from my 401k plan. I can just roll the 401k into an IRA and take the RMD from the IRA. What the rules say. Although you can roll your 401k into a traditional IRA, the RMD amount is not eligible for rollover. The 401k RMD must be satisfied from the 401k prior to the rollover. If, for some reason, the financial institution makes a mistake and allows the RMD to be rolled with the other eligible assets, the RMD is deemed to be satisfied from the 401k, but now represents an excess amount in the IRA since RMDs are not eligible for rollover. The amount of the 401k RMD would get removed as return of excess from the IRA to correct the error. Common error. I am still working, so I don't have to take an RMD for my SEP or simple IRA at my current employer. What the rules say. Although you do not have to take an RMD from a 401k plan, if you are still working and do not own 5% of the company, this exception does not exist for SEP or simple IRAs. Once you reach RMD age, regardless of employment status, RMDs need to be taken out of the SEP and simple plans. If we can be of help, please reach out.